customer BK Forex. Welcome to our Forex data techniques for 7/11/13. Dollar dumped as volatility really explodes. As always, trading Forex on margin carries a high level of risk. I ask you to read this disclaimer very carefully, so you should be aware of all the risks associated with trading on margin. Seek advice from an independent financial advisor if you have any doubts. Well, what a night today. What an absolute explosion of volatility and a total reversal. Let me just bring up first the euro-dollar chart, which I think is the most dramatic. And the volatility, by the way, just continues into the open European session. First and foremost, of course, the Fed minutes come out, and they are not nearly as bearish, is not nearly as hawkish as everybody thinks, and that of course blows up the euro past 29s and even 29.50s, and then comes back and it takes us very close to the 30s, and then on top of that, the press conference by Chairman Bernanke turned out to be far more dovish, as he completely, literally changed his guidance. He basically changed his tune from stating that they were going to taper very soon, that the economy was really improving, to really focusing much more on the fact that unemployment rate has to be 6.5% before they consider any type of tightening accommodation. And therefore, this total change of rhetoric created massive volatility so early that you had huge explosion in the early Tokyo session, which then got corrected, of course, as we exploded all the way from essentially 20, almost 400 points in a matter of several hours, and came back down. So hard to say exactly where we stand, but of course I think 30 now becomes the critical equilibrium line, and probably now is going to act as a modicum of support against this massive explosion. Definitely has been a very, very serious change of momentum. As you can see on the dailies, and look at this daily chart. This daily chart just shows how dramatically powerful this rally was. It essentially covers, I think, more than 2 weeks worth of price action in literally one day. We've sort of exploded all the way to the upside. And as I said, you look at the chart here, and you see the 30 level, which was former resistance, which was former support that became and got broken, that got taken up to the upside, and now got congested here. This 30 now, I think, acts as the general equilibrium level for euro dollar, around which we're going to oscillate as we look for further directionality. But having made this huge move, of course volatility can persist, but I think that having made this huge move, the downward bias of the euro has been relieved, certainly for the near term, and the upward bias now comes into view effectively. And the 32s, which was the spike highs set in the early Tokyo session, are going to be the natural magnet for the longs as we try to push ourselves beyond this 30 level. So if we can sort of push away from the 30 level, then the upward bias of the euro really begins to come into play. And we could potentially now start to make a challenge to this 32, 33 area, which is the next level of highs that the euro has seen. We could also, of course, have a complete reversal of volatility. But if we do have a reversal of volatility, I don't think that you're going to have a break to the downside. In other words, this was such a powerful move that whatever correction we have, it's probably going to settle at very worst at the 2900 level as the support comes in now after this really, really big reversal. Similar story, of course, in dollar yen, where dollar yen gave up the 100, gave up the at one point gave up the 99, and now it seems to be consolidating around the 99 level as the support level. One of the interesting things that you want to note about dollar yen is that this particular leg of the rally failed to make a fresh high, and is actually now looking pretty negative technically, because you could effectively make a case that we're starting to build a triple top, or perhaps even a sort of a longer term head and shoulders type formation. Not really head and shoulders, but sort of a funky version of head and shoulders. But the point being is, however you want to look at it, is this high, unless broken to the upside, really weighs as a negative factor in dollar yen. And one of the things that I kind of wanted to take you back to was, remember the idea that we talked about, that here was a trend line that was broken. And the break of the trend line really suggested that it was going to be much harder to make fresh highs in dollar yen than in prior times when the trend lines continued to be to the upside. I think this is pretty much a good example of the fact of how the longer term trend really continues to weigh on this, as of course now the fundamentals really change themselves around, and dollar yen looks to be, for the time being, certainly a weak trade to the upside, and could potentially test this 98 support, which has been a key support from which we broke out Aussie also had huge reversals, and it was just, I think of all of them, has been one of the most volatile. Aussie has been really trying to take out this 93 level, and this 93 level just continues to be an extraordinarily difficult level to take out. So I think one of the more interesting things here is that prior to this, we talked about it for a couple of days where we had the calm dollar strength against the high beta, where Euro Aussie was a trade to the downside. One of the interesting things that you saw today is how that trade completely turned around, and how Euro Aussie now became a trade to the upside big time. And we went from below 39s to now above 41s as we try to consolidate. Still really unclear. It looks like Chop City on the crosses. But when you look at the Aussie, what you really need to see, and we did have actually relatively positive employment data, you really need to see this 93 taken out. If 93 gets taken out, it becomes a much more constructive trade for the Aussie, and really opens up the run back up to 95s, as a lot of these late trapped shorts get caught in the longer term short squeeze. So I think that's a trade very much worth watching above 93 if we can clear it, and if we can't, then it looks like we could possibly drift back towards the lows. At cable, of course, similar kind of a story in a more muted fashion against the dollar. We broke through the 50s. 51 seems to be the level of resistance here for cable. But cable, I think, in many ways, is just mimicking the price action of the euro. So if the euro can maintain its upward bias and take out the highs set in panic squeeze covering yesterday, then I think we have a reasonable chance here to make all the way 52s, 53s. Generally, I think that's sort of the operating technical point of the day, is that the squeeze highs, which in this case in cable were 51.92, say 52s for cable, and the squeeze highs for the euro, which was 32 for the euro, are now the key operating trade to the upside. Those get taken out, then we have further upside to go. If they are sort of now going to act as the swing term, near swing highs, then we're probably going to have consolidation and come back down, which means in the short term that I kind of don't want to get involved on the long side with these pairs unless these swing highs are taken out, because that would really clear the way for further upside action and really create even more of a squeeze play in the high beta currencies against what happened yesterday. So that's how things shape up. A very interesting night of trade. We'll see how the rest of the week goes. This is Boris Schlossberg wishing you guys the best of luck and the best of trading. Over and out.